Ladies and gentlemen, today we're diving into our final deep dive breakdown before NIO releases its next earnings report. This video is meant to bring you completely up to speed on everything that unfolded throughout Q3, what the numbers are shaping up to look like, what major developments took place, and most importantly, what we should realistically expect heading into this earnings release. Q3 was loaded with activity from record-setting deliveries to major product launches to strategic cost adjustments, and all of it sets the stage for one crucial question. Is NIO truly on the path toward profitability in Q4? Let's take a full look. This is not financial advice. Please do your own research. Q3 was a heavily eventful quarter for NIO, especially on the delivery front. The company reported a massive 87,071 vehicles delivered during the period, which represents a remarkable 40.8% increase year-over-year. While that headline number is exciting for growth, it's important to keep in mind that the delivery mix in Q3 included more ONVO and Firefly vehicles. These models carry a lower average selling price compared to NIO's premium lineup, which means investors shouldn't expect revenue to grow at the same 40% rate. Still, even with a slightly lower ASP, revenue should increase meaningfully thanks to the sheer volume of vehicles delivered. But delivering more cars wasn't the only highlight of the quarter. NIO's CEO has openly mentioned multiple times that in order to make Q4 a profitable quarter, which is the central target the company is pushing toward, Q3 needed to absorb a substantial portion of expenses. This makes Q3 a prep quarter of sorts, and there were clear reasons behind that. In just one quarter, NIO hosted two major product launches. One was the ES8 launch event that was held in September. The other was the ONVO launch event at the end of July. Big events like these are costly in terms of planning, marketing, production, and logistics, all of which get recorded as Q3 expenses. As for the product mix, ONVO L90 deliveries are expected to play a major role when the Q3 results come out. The L90 was already gaining traction throughout the quarter, and its momentum is expected to show strongly in the numbers. On the other hand, the new ES8 only launched near the end of Q3, so the majority of its deliveries and its impact on margins will not be reflected until Q4. This timing difference will make Q3 more heavily weighted toward ONVO sales and less so toward premium ES8 deliveries. Now let's talk about losses, one of the most important elements investors will watch. In Q2, NIO posted a net loss of around $697 million. If Q3's net loss comes in under $500 million, that would be considered a very positive sign because it would indicate that NIO's ongoing efficiency programs are working. Throughout the second half of the year, the company has been aggressively optimizing its operations. They've trimmed unnecessary expenses, reduced headcount in certain areas, and streamlined the business overall. These efforts aim to significantly improve cost performance entering Q4. However, there is also a scenario where losses increase instead of shrink. The hefty spending on two launch events, combined with severance payments from workforce reductions, could lift Q3 expenses. Many NIO houses and retail points in China, including some in Beijing, were closed as part of the restructuring, and shutting down locations typically comes with one-time costs. These factors introduce the possibility that Q3 losses might remain elevated, or even exceed Q2 levels. So this quarter is unpredictable in that sense. Now let's shift to cash, a very big question mark heading into earnings. At the end of Q2, NIO was holding about $3.8 billion in cash. But two massive financial developments took place afterward. First, NIO invested 20 billion RMB, around $2.8 billion, directly into NIO China. Before the investment, NIO held about 27 billion RMB in cash. Nearly three-quarters of that was injected into the domestic entity, which is a massive capital shift and will clearly reduce the cash balance reported in the quarterly results. At the same time, NIO completed a substantial share dilution in the Hong Kong market, raising approximately $1.16 billion. So on one hand, you have a major cash outflow. On the other, a major inflow. Put together, the numbers suggest that NIO's ending cash balance should be lower than the $3.8 billion from Q2, but not disastrously low since the dilution brings in a meaningful amount. Still, the final cash figure is unpredictable because the exact timing of payments, investments, and operational cash flow is unclear. Another unknown heading into the report is the status of the McLaren partnership fees. NIO has been providing consulting services to McLaren, and it's unclear how much of that revenue is recurring or whether it will still appear in this quarter's numbers. If those consulting fees continue, they could provide a nice additional boost to NIO's income. But the biggest theme hanging over this entire earnings preview is profitability specifically, whether the company can turn profitable in Q4. Other players in the Chinese EV space have already communicated strong confidence. Li Auto has already achieved profitability. XPeng's CEO publicly stated that he is almost absolutely certain, 99.99% sure, that XPeng will turn profitable this year. NIO is now under similar pressure to demonstrate that its restructuring and product upgrades have positioned it to finally cross that same threshold. Based on what we've seen, it appears that NIO is pushing hard to make Q4 the breakthrough quarter. Deliveries so far have been very strong. The company has been steadily reducing non-essential costs. Several customer perks that were previously part of their brand experience have also been removed this year, leading to meaningful cost savings. Many other small freebies have quietly disappeared as NIO prioritizes profitability over promotional benefits. One more factor that many investors are overlooking is the incoming wave of battery swap partner vehicles. NIO has several collaborative agreements with other automakers such as Chery. Those vehicles, designed to be compatible with NIO's battery swap stations, are now in their final production stages, often described as rolling off. Building a new car model takes multiple years, and these agreements were signed around 2 years ago. This means partner vehicles are finally nearing completion, and typically, for infrastructure-related services, payment to NIO arrives early, possibly in Q3 or Q4 depending on how the contract is structured. These payments may add a meaningful additional revenue stream outside of pure vehicle deliveries. As for the delivery mix, most of Q3's delivery volume came from established models such as the ES6, EC6, ET5 Touring, and of course the ONVO L90 and Firefly lineup. But Q4 will bring a different mix entirely. Deliveries for the ES6 are expected to decline sharply, while the ES8 is set to become one of the main drivers of volume. And because the ES8 carries strong margins combined with the CEO's comment that both the L90 and ES8 have very healthy margin structures, Q4 could show a much more favorable profitability picture. With the ONVO L90 performing strongly in Q3, it's also possible that the model itself could be profitable on a standalone basis. If that's the case, then ONVO could become a major lever in NIO's overall path toward profitability. Overall, Q3 is shaping up to be a transitional quarter, not fully bullish and not fully bearish. It is a quarter where expenses were pushed forward intentionally, new products were launched, cash movements were significant, and foundational steps were taken to prepare for the more important financial target, reaching profitability in Q4. Q3 was filled with record deliveries, strategic spending, deliberate restructuring, and complex financial moves. Some numbers may look messy because Q3 absorbed a lot of necessary costs. But Q4 is where everything matters. The CEO has repeatedly confirmed that the company is still on track for its profitability goal. Deliveries are strong, margins on key models are improving, partner vehicles are nearing release, and many unnecessary costs have been cut. What are your expectations for the upcoming earnings report? Will NIO deliver a surprise or keep things conservative? Let me know your thoughts. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.